Good morning, everybody. Happy Monday, traders. How we doing today? It is the 24th of January. Hope everyone has their football helmet on or their hard hat, seatbelt, whatever. Interesting week last week, yes? Stocks, options, forex, cryptos. Let's talk. Risk disclaimer. We understand there's risk in trading. Please not always use trade capital only. Do not trade with money you can't afford to lose, whether you're trading stocks, options, futures, forex, cryptocurrencies. You know the risks. Let's dive into the charts. So interesting. Last week was a bit of a bloodshed week, but look at the context of the larger picture, and we're still just coming back into correctional territories, right? Now, I'm not saying that things were, you know, jolly last week because it certainly felt like this is either the great unraveling and how bad does it get? Everything essentially across the board is down. Put some numbers to that. We are sitting at last week's moves. The Dow Jones down 4.58%, the S&P down 5.68%, and the Nasdaq with tech shedding as taper tantrums and Fed raising rates coming in March probably. The Nasdaq down 7.55%, and I'm sure on everyone's crypto radar, everything's sliding. Bitcoin fell as the close of Friday, was down 16% and continues to slide through the weekend. Bitcoin is down as low as 33 and change. I know that Ethereum was below 2,500. So I just want to show a screenshot of my chart alarms this morning when I opened up everything. I don't think there's enough space. So Disney, MicroStrategy, The Spy, Tesla, BTBT, Zillow. I mean, it's chart alarms galore. So yes, whether I've got it to the upside or the downside, things are activating. Um, Also, just to give you a little context year to date. So here we are 24 days into the calendar year. The Nasdaq is down 11.99% year to date. The S&P down 7.73. The Dow is down 5.7. So, we've talked about this before. If you're looking for growth, that's tech, that's Nasdaq. It's getting crushed right now. If you're looking for value, that's the Dow. So even when it comes to risking less, if you are favoring more value plays right now, like the DIA or the Dow Jones, and what makes it up, look, there's still room for the Dow to fall by a lot, right? There's still room for the S&P to fall by a lot. I mean, look at this. I would not be surprised if we have levels like 400 tested on the S&P. I mean, from our COVID swing from our March 2020 low, that 400 level on the SPY is only a 30% pullback. Now, I say only, like 30% is huge, especially when we're shedding, 30% from all-time highs. Like the points are going to be blowing people away, and the headlines will read like it's the worst point sell-off ever, blah blah blah. It's like, right, well, that can happen when it's the highest level it's ever been. So of course the points will be higher. But I mean, we know that the market has waves. We know the market should have waves. We've essentially been trading a broken market for the last 3 years because it's been through hell and high water. Every dip has been just aggressively bought. Buy the dip, buy the dip. And yeah, you probably are buying the dip now. You're probably dollar cost averaging in, but just be prepared for possibly some more pain, some more downside. Now, I do think there's going to be some amazing opportunities. I was super active last week. In fact, I had a great week. My overall results, I'm trying to think here, between, let's see, 9 trades in profit last week in stocks and options, closed out for almost 1,000 pips on a Forex pair. Did some discount shopping on some of the big tech slides and the FANG stocks like Disney, Netflix, Amazon, and Snapchat. Snapchat's not a FANG man, but still pretty good bargain. Anyway, we also closed out some trades here. Our SPY, this trade is probably trading for more than what we closed out last week. We'll check it out. The SPY is looking at a pre-market at 432, which puts our long 470 put in some pretty good profit. So if you just look at it from a value side, 470 minus the open price of 430, let's say 432, it's trading right below that. That puts, wow, that's crazy. That puts that straddle up to potentially, I mean, it could be trading over $30 right now, which would be nuts. In fact, let me see if I can get a price on that. Where are you here? Let me see if I can get a price on Hmm. I did open that up just a second ago. I must have closed it on accident. All right, I'm gonna get logged into my broker account here, and then we'll take a look at some little bit of everything. So, David, good morning. Gary, Wayne, Kevin, Andrew, Russ, good morning. Good morning, Marilyn. Fauna, good morning, everybody. Nice to see you. All right, let me take a look at the SPY. So the trade that we were in was a four-part trade. It's a four-leg trade, and we were straddling the SPY based on volatility. We had it out to the 18th. We had the 470. So we had the 470 call, and we had the 470 put because we were directionally neutral on the trade. And then on the, so we were buy to open, which would be a sell to close, buy to open, which would be a sell to close. Then we did the 435 put. That's a sell to open, so a buy to close, and then the 500 call right here, which was a buy to open, sell to close. So right now, because the call side is upside down, the put side, while the put side is trading, so you could close the whole trade out for 22.72. Our target was to get to 25 bucks. So because we still have some value in the calls and some time in the calls, we're not getting our full intrinsic value of the puts. But it's going to be interesting to see how it opens up in the next 23 minutes if the put side is really going to pop. But I'm out of the trade. I closed it out for about $1.75 in profit, which is less than what I wanted. I mean, truthfully, if I've got traders that are staying in this trade, we might be able to grab that $25 credit like we talked about. But I guess my only concern is because we have time left in the trade, if we have this, maybe this 10 to 12% sell off area and the market has a dead cat bounce that brings us back into like 450, 455, then that puts us back into a negative position overall. So I'm fine managing profit. I know traders closed with me last week anywhere between 2150 in credit or 2199 in credit. This morning I can see the mid is trading at 2272. So looks like another dollar, but another dollar or so from where I closed would be in profit, which again, not a bad play. I'm still long. Oh, I'm still straddling Apple, which is also sold off pretty nicely. So Apple trading at 158 for the open. I have a 175 by 150 spread, as well as a 175 by 200. So I'm straddling Apple. And again, it was just based on volatility. I know that we were overstretched. I think that Apple, along with Microsoft and others, have room to drop down to these previous levels. So I'm looking for, and there's time in this one, but if we get below 150, as long as I can cash in something close to like $20, this trade cost me like $15 to trade, and so I'm looking for like a $20 net credit when it's all said and done to grab, $5 of profit, which would be about 30%. I'll take like 30% on the position, hopefully. Okay. All right. Last one should be buy to close. You're correct. Thank you. Still trading about the same. Yep. So the sell to open, buy to close, you got it. So 2261 is where it's trading right now. But like I said, I mean, I'm out of the trade. So if anybody, from Equities on Demand, we talked about it last week. I posted it in Telegram. I closed out at 2150. I know traders were taking it towards the end of day Friday, got like 2191 or 2199. Trades a little bit higher today, which is great. Grab your extra 50, 60 cents, protect your profits, and a nice little return on that one overall. Okay. All right, let's take a look at some other stuff. One thing I'm also looking at this week, so I don't have a crazy busy week with expirations, but I am going to be watching volatility. I am leaving my VIXI uncovered, my VXX uncovered. I know that I could probably jump in and sell some calls and grab some extra premium, but if we have a big spike, let's say that the VIXI just starts to really jump up and the fear gauge is escalating like we had back in 2020. Well, if the VIX runs uncovered and just comes up to these really, high levels, the VIXI goes with it, the VIXM goes with it, the VXX goes with it, and I'd rather leave those uncovered. So, I mean, we're getting a really big jump on the VIX. We have a 2021 pivot at $40. And if I take a look at the VIXI, which I'm currently long on for a few hundred shares, and it's up around 30% off the recent lows. The VIX the VIX instrument, the fear gauge is up like 100 plus percent off the recent lows. Not sure why my spacing is all out of whack, but this is the VIXY. And I'm looking for a run at least back into this, 200 EMA, possibly higher with a yearly pivot sitting around 33.72. My break even is around $24 on this. So pre-market's 20.47. I've been riding this longer. I do have some buy trades down here just in case, but here's what I'm looking for. If this spikes up to this yearly pivot, then I'm going to take my profit here. And what I don't want to do is try to sell a covered call and get in the way, right? So I'm just going to let this run uncovered. If this chart alarm gets activated near this yearly pivot around $34, that would give me over $10 a share. I'm just going to take profit. So more than likely, I'll take profit. If it runs and just looks like, man, this thing is going bananas, then maybe I throw in a trailing stop loss. But I'll be pretty happy at $10 a share if I can get it. So I am long on volatility. A couple of those straddles are playing out really nicely. One thing that's going to be super important over the next couple of weeks is managing a long put. If you're in a credit spread, if anybody's trading credit spreads and trade options, credit spread, something like this. If I do a bull put spread, so as an example, here's an example. I'll go to Netflix. So a little bit of a teaching moment for those interested. Netflix is trading at 382. I have a credit spread on Netflix right here, the 410 by 405. Now, what that means is I did this in my trade for Netflix. I sold the 410. So I went into a credit spread, went out to March, I think it was March 18th. Yep. So I did a monthly expiration there. So March 18th and the 410 by 405. And I tried to collect as much premium on this as I possibly could. Right now it's trading at 282 and I got filled for $3. All right. So my max risk on the trade is $5. And because I collected $3 of credit, that means my max risk is actually $2 on the trade. Right now, here's what's even better, in my opinion. Because I have some time in this trade, if price, by the time I get to March 18th, if price is back above $410, I can make the full $3 credit. Okay, that's not drawn out very well because my dexterity is lacking this morning. So I can make, I'll put this on the chart. So if price is greater than 410 by expiration, I keep $3 credit and I can keep the full $3 credit. Okay, if price is less than 405 by expiration, which is the lower leg of my trade, I lose $2 risk. Okay, because I'm still keeping the credit. I keep the $3 credit means my risk is $2. So I would lose that $2, or I can use the credit spread and cash in on the long put for insurance. And I teach this a lot in Equities on Demand. I will do this for this particular trade, right? So let's say that just this slide continues, it gets worse, and oh my gosh, the sky is falling, blah blah blah. Netflix drops to $300. Well, if I can time this well enough where Netflix is dropping like crazy, and I close out my long put, okay, which would be my 410 is a sell to open, my 405 is a buy to open. So that means my 405 is my long put. I can close the 405 long put. Let's just use the number. If price drops to $300 in Netflix, I could potentially cash in the long put for $100 to $105. Okay, which is crazy because my assignment price would still be $410 when I take the shares. But if you calculate a break even, and this is one of the most important things I can teach traders about trading options, you have to know how to calculate your break even trade. Okay. So I could take this trade, get assigned Netflix at $410, but if I collected $3 on the credit spread, and if I cash in $100 on that long put, my break even price on Netflix is 307, which is insane that I could buy the stock at $400, start my trade with a credit spread at $400, and potentially own it, break even at 307. which means I would own this stock for a 60+% discount since we had highs up near $700. Okay. So credit spreads are incredible ways to start trading. But like I said, know what the consequences are, for where your strike prices are at, how the expiration works, time is on your side, you're selling premiums, all this stuff, but also know how to calculate a break even. And it's a really effective way to trade. You give yourself some time, sell premium, collect the credit. We have an inherent bias in the market that's bullish. I found this pretty awesome screenshot that just shows long term. I think we talked about this last week in this Mind Over Markets event that we did. I had this nice little stat on the holding period. Let me see if I can find it here. Here it is. Check this out. I talked about this last week in class. So there is an inherent bullish bias in the stock market for the last nearly century. Okay, this is the S&P returns from 1928 to 1921. If you are a day-to-day trader where you buy something, hold it for a day, and you're looking for profit, you still have an above 50% chance of being right, which is crazy. Like just the probability of if I'm buying something, my odds are above 50% that I could be right, just being bullish. If I'm willing to hold it for a month, a little bit higher. Hold it for a year, a little bit higher. We're talking like 65 to 70%. Okay. 5-year period, over 80%. 10-year period, almost 90%. And a 20-year period, that's insane. Okay. Granted, 20 years is a long time to hold friggin' stocks, right? But a 20-year period, we have like a 95% chance of being profitable. So, yes, that's why the old adage, time and patience, it works. So, anyway, interesting stuff. Okay. So, a little lesson there just for fun. Let's get into some other instruments since it's a little bit wacky today and it's going to be a wild week. Let's take a look at the currency strength chart this morning for Forex. We have obviously risk off flows going on. The Swiss is taking a little bit of a breather, which I'm happy to see. The JPY and the dollar moving pretty much in sync. Timberlake will be proud. So we're going up. We have a big risk off flow today with the Aussie getting weaker and the Japanese yen and dollar getting stronger. The Swiss is up here as well. I have taken some short positions on the Aussie yen and the CAD yen this morning. So I'm looking for some scalps to continue for some of that risk off flow. And I will be looking to protect those with some trailing stop losses. If I can have those things pushed, 30, 40, 50 pips for my entries last Friday into today, I will be looking to take some profit scalping some of that Aussie yen. I've got some robots running in those as well. So hopefully they'll continue to unwind, and that's a nice little hedge, playing some risk-off trades as I get positioned on other currency pairs. All right, take a look at the dollar index of gold and silver. Dollar index is at 12,201. We still have our 2022 yearly pivot, but with the risk-off flows, we're back above this breakout point. I think the dollar is going to be, it's going to be a fighter. I mean, I still think in the middle of all this, with the rates likely being raised, I can go to that CME futures group or the CME group and watch the Fed and see what the probability is. The baked in 25 basis points rate hike in March is probably 80 to 90% at this point. And so if the market will continue to price that in, we had a bit of a pause right here. If we still have a push, I mean, there is room for the dollar to continue to get stronger, right? And again, I don't know the timing of this. If I did, then I'd have 99% of my account on it. But are we going to go up and revisit this level first and bake in and price in the multi-year hikes ahead, like 3 hikes this year, 4 hikes this year? If so, then the dollar probably gets stronger. But once we have, August, September going into the end of Q4, does the market unravel on the dollar? Maybe. I don't know. But we're sitting right in the middle. And if you trade support, that's where you buy low. If you trade resistance, that's where you sell high. In the middle, you tend to favor what the direction is that brings us into the middle. And so right now we are in a bullish trend on the dollar and we're sitting in the middle. So if that pressure from recent price action is going to continue, I am more in favor of thinking that the dollar gets stronger and this continues to head up. And I've said this before, if I'm going to follow dollar strength, I think the best trades right now would be Aussie dollar short, okay? New Zealand dollar short, pound dollar short. I think those are the 3 best ones right now. Saw a pretty good reaction, excuse me, last week. I closed out on dollar CAD long. We did close out. I closed a partial position on pound dollar short. I know you could probably argue that euro dollar short's decent as well, but the euro tends to get a little bit more of a safe haven play and a safe haven bid more so than the others. So if you're looking for just straight up risk off trading, these are the directions I would take. Aussie dollar, New Zealand dollar, pound dollar, all short. and that would favor dollar strength, favor risk off flows, and I think that's pretty solid. Now, if you're also looking for additional risk off flow, I think you have Aussie yen, CAD yen, and New Zealand yen, all very good plays, right? Now, when we see risk off flows, we tend to see higher volatility. When we see higher volatility, we tend to see flags. All of these trades right here, especially on the yen crosses, I'm looking for bear flags. Okay, where the market just pushes lower and then takes a little breather and pauses and then pushes lower, pushes lower. We have levels to unravel on all of these. So because it's kind of the, I mean, it's kind of the tone that's right in my face right now. These are the currency pairs I'm going to focus on for today's, weekly outlook. Right. I think we have some opportunity to be in these trades, to have some nice positions, and I'm going to look at some profit targets on each one of these. All right. So dollar. I'll go back to the other currency pairs I just talked about. I want to go oil, gold, silver, and some cryptos. So oil at 83.49 with another weekly high. This does technically put in a massive concern for oil, in my opinion, technically. Okay. I know that we could have like the energy squeeze, and I've talked about you can't really create a carbon neutral economy without using the energy that we have now, which is yeah, carbon neutral. So right now we have carbon. We have, fossil fuels. Uh, and sorry, I had a phone call. We're gonna have to, I mean, figure out whether this is. Look, this is ridiculous, right? Since this recovery, we stretched up here, imbalance, and it's overbought. Imbalanced again, and it's overbought. We did have a little bit of a pullback. We did have a little bit of a pullback here. I've been talking about this potential three drive pattern where it's 1, 2, 3, 4, 5. We had a little drop there, but it did not break the lows. Okay. So we might just continue this kind of broadening formation in oil where, yes, it might have hit a new high recently and it comes all the way back down, but doesn't do any structural damage and then goes all the way back up. All right. So we might be dealing with a lot of volatility around energy, which right now is like one of the top performing sectors in the in the world. I mean, energy stocks have played really well. Financial stocks doing pretty well. Also, financial is a bit of a value play. Energy, inflation is helping with energy costs being higher, and it's obviously a big supply and demand issue right now. So, question is, from the technicals, did we score a point enough where now we're going to have that equilibrium, kind of a pullback here where we have room from, the mid 80s here, high of $88, we could have oil drop back to $70 and it does zero damage to this chart. So, could there be volatility? Very possible. We drop and then we rally. Okay. Now, we could also have this market pushing a little bit of a pause, and then we just look for another push higher. And I have chart alarm set all the way up to $100 because right now in oil and energy, the path of least resistance remains bullish, right? And I know it's overstretched, but I'm not actively short. Okay, if I was short, it would be short term, but I am overall still long on energy. I think oil is going to be pushed by big money to probably get up into this $90-$95 area. I think it has its sight set on $100, right? But a volatile pullback is very likely, and we could pull back, like I said, to $70 and do very little damage here. Okay, gold and silver. Gold is trading at 1840. I'm long on gold all the way up to this high from June of 2021. That's at 1920. So we've been looking at 1750 long, trying to see if we can turn in this resistance getting broken around 1830. It is broken. We had a nice little wick above it. We're testing higher than that today, 1840. So look left, look left. Those are profit targets. Obviously, look left up here. If this thing wants to run like crazy, it can. That's a kind of an anti-dollar move. Obviously, gold gets some bid with risk haven because it's a bit of an inflation hedge as well. Silver has performed pretty darn well. We're at 23.85. We had a bit of a pullback. Let me see where SLV closed on Friday. So SLV closed at 22.38. Awesome, because I had a 22 by 21.50 credit spread, so that was in profit, lowered the cost a little bit more. I still like silver bullish towards 26. And cryptos. Bitcoin trading at 33,448. Go down to the weekly chart, or the daily chart rather. Okay. Let's see. Daniel says Bitcoin on the 30-minute candles had a wild wick to the north. All right, let's take a look at that. Do you see that on a broker feed, Daniel? Oh yeah, look at that baby. Snapped right up to the 37,991. That's right at the weekly pivot. Did you? I mean, did anybody see this happen like in real time, or is it? I mean, you got a 1 minute candle doing the exact same thing. So, um, man, that would have been pretty crazy to watch in real time. So, if that's, I mean, if that's true, if price actually reflects that, then we clearly have some like pump and dump or some fades going on there. But still, look, just take a look at the technicals. This is what I'm seeing. Look, everything is like shitty right now, right? Everything is bad. Everything is selling off. Everyone's scared. Like I'm saying, look at the charts. Don't lose perspective of where we're at in the higher time frames. This is a correction. It is long overdue. Everything is overvalued. This is the market sobering reality of, hey, the Fed's going to raise rates. Tech can't keep doing this. We can't keep seeing higher highs, higher highs, higher highs, higher highs. We can't have, companies that make zero products, make $0, make zero anything, and yet like their stock is, 5 or X times what it probably should be. So, as an example, look at Peloton, right? Look at Peloton. Peloton is exactly what I think the markets can do. We can have all this expected gains and this expected value. And what do we get instead? We get reality. Peloton was never worth $170. It shouldn't have been. It started at 20 bucks, right? What about Zoom? What about DocuSign? Like, what about all these crazy runs in tech? I mean, they never deserved to be that high in the first place. So would I buy Peloton right now? No. I don't want to touch this thing. Eventually, when they get their crap together and they start to stabilize, then sure, maybe they get their subscriptions in order. Maybe their brand is strong enough. But I don't know. I'd rather see competition. You know, so, I mean, is there room to come back to $70, $80? Like, I don't know if Peloton should ever be a $70, $80 stock. So I'm just going to let this one kind of die right now. And this is what I think a lot of tech could do. Overvalued tech could do this. If you're looking for opportunities to be profitable now, you're probably trading the Dow. You're trading value. You're trading financials. You're trading energy. You're trading consumer staples. That's where I think the money's going to be flowing right now. I'm sure there's some traders that are like, I'm in bonds. Cool. I'm not, but I am long volatility. And you can look at the 10-year notes. The 10 years been steadily raising. We're sitting at 1.71. We had a recent high at 1.88. This continues to be the same thing I've had on my charts for a while. If we get into 2+% territory on the 10-year, then it makes sense. Like we're just continuing to have an unraveling as fixed income, big money that's had a 2 decades worth of profit is going to start looking for security and less volatility. Okay. Yes, inflation be damned. You got to put your money somewhere. Okay. But I would rather take, a battle right now of inflation of like, okay, look, I'll park my money in some fixed income instruments and I'm going to lose potentially 5 to 7%. But the ability to keep, the volatility down, when we could have just over the next 12 months could just be like turbulent. We could have, the market sell off another 15, 20, 30%. I mean, a portfolio that's stable and looking at, preservation of capital is going to fare a lot better than one that's totally correlated with the markets and totally exposed and due for like a 30, 40, 50% reduction, So anyway, there's just all sorts of crap to navigate right now. So Bitcoin, like I said, 33,000. I'm still very committed to my round numbers. 35. I bought some Bitcoin this weekend. 30,000 is the next level. I'll buy some more Bitcoin at 30,000. These aren't crazy amounts. I mean, truthfully, if I'm going to start dumping money on, like, I'm going to buy a whole coin, it's probably going to be down at 20 or 10. I don't know what this is going to do. I think that this could be resistance and support, and we end up jumping off these levels. But you know what would scare the pants off of every, diamond hand Bitcoin person or everybody that bought Bitcoin at $60,000? How about if it gets down to like 80, 90% in a drawdown? That'll scare a lot of traders. And you know what most traders do when they're in that type of drawdown? They close at the lows. So I mean, it's going to test the resolve and the reserve of all these traders, so-called traders that you just want to see what they do. Okay, so I'm going to hold, right? I mean, I've been in Bitcoin early enough, got some good prices in, $3,500, $4,000, $9,000. I know it's way higher. I'm actually happy and fortunate that this has offered some chances to buy some discounts. But again, dollar cost averaging, I've got chart alarms going off like crazy. VIXY spiking up, good. Uh, dollar cost averaging, staying level oriented, and these are $5,000 increments for me on Bitcoin. So 35, I bought some. 30, I'm going to buy some. 25, 20, I'm going to buy some. Ethereum, they're $500 increments. Ethereum's trading. It was below $2,500. It's at 21.95 right now. So 2,000. If we tap 2,000, which is lows at 18, let me tap 2,000 right here. I will toss in a little bit more on the Ethereum. So we're not that far away. This is $500 increments. So 2,000, 1,500, 1,000. Pfizer hitting yearly pivots. Okay, it looks like this week I might have to cash in on a credit spread for Pfizer. SVXY, sweet. Finally got filled on a credit spread on the SVXY. Good. All right. So for this week, just from stocks and options side, I only have 4 expirations, but I'm going to have chart alarms probably activating all week. And there's things I want to watch. This week in equities on demand will be super busy. This week in the flex room will be super busy. So it is, like I said, I said this like last year, 2022 could be a year of the trader. There's a lot of uncertainties out there that are swirling. We're seeing it right now. Some traders don't like this, right? I mean, everyone wants to call themselves a trader. I'm an investor, but when it looks really crappy outside and this is what the environment is, you have to trade in, it's like, how well do you do? It's not fun, believe me. Like, it's not fun watching everything go against you. It's not fun when the markets are, irrationally bearish, but it's also been long overdue. And if you take a look at the chart and you think about where we are at, what we've created and artificially engineered over the last 3 years, especially, I mean, come on, man. You can't think that this market is going to keep doing what it's been doing. So, all right, sweet. Closed out my bear call spread on the SPY for a 5-cent debit. Excelente. That's a nice little profit as well. So stack that one up for the week. All right, profit already. And then filled on the SVXY. That's good. Cool. So that was a 45-cent profit on a couple of contracts for the SPY. Thank you very much. Anything else? Yeah, Daniel's asking, can you explain how the rates would help or hurt crypto? Look, everything's going to hurt right now. Everything's going to hurt. Like, the only thing you could be long on right now would be volatility, long bonds, long, treasury yields. And no, right now it's like things are going to favor some risk off flows, and they're going to favor that the official cash rates and central bank interest rates are going to go up. Right now, the Fed is obviously doing this in the wake of potentially a very nasty Q1 sell off. So, what do I think cryptos are going to do? Well, right now, it's a pretty clear correlation that crypto is not a safe haven, right? Crypto is not the disconnected utility or store of value outside of the stock market. Like, they're very much lumped together. So, if the stock market's dropping, I am pretty certain that cryptos will be falling as well. All right. And one thing you have to kind of make a mental note of, and you should have, if anyone's been paying attention this last 3, 4 years, we have seen 70, 80, 90+% pullbacks on Bitcoin, on crypto, right? So think about it. We create this massive run from a low here at $4,000, a run here for $4,000. And we had this crazy 1,500 pip rally or 15,000, sorry, 1,500% rally. 1,500% rally that then turns around and corrects 55%. Now, look, 55% is pretty high. Okay. Holy shnikes. That was freaking fast. All right. I need to check on Snap. Holy shnikes. I just had a long put on Snap that just closed. That was a little premature. Anyway, back to my question here. So I still think that like 80%, 90% is very possible. So I hate to say it, but let's say we take this recent high around $68,000. If this pulls back 80%, okay, which we did back in the 20, if you think of that 20K high from here, how far did we pull back? We created that 20K top. We pulled back 83%, give or take a few since I'm not zoomed in here, but about 80+%. So let's just, okay, if that's our history and context to go off of, let's do the exact same thing. So let's take these highs right here at 68,000 and let's see where 80% gets us. We're talking a $13,000 Bitcoin. All right. Now, for everyone that bought Bitcoin in the 60s thinking it's going to 100K, You're not happy. I mean, for right now, when I'm buying it at 40 and some more at 35 and some more potentially at 30, look, I'll buy the darn thing down to 15,000. I'll buy it at 10,000. I mean, I'm comfortable allocating some of that because of the potential upside longer term. But 80%, this is going to make it really interesting to see like crypto's dead, and it's going to turn off the retail trader potentially. But there's probably some crazy stuff going on in the background, like regulation. And think about big money. Think about big, massive money that could get in at $15,000 off of highs of 65. You know how discounted that is? I mean, who wouldn't like to say, okay, for a 1% allocation, let's take a risk with now if Bitcoin is trading at even 20K, right? If Bitcoin's trading at 20K and ultimately in 10 years hits $1 million, it's a 50x return. I don't know what trader investor wouldn't be willing to take a 1% risk for a 50x return. So if this flushes down, it just doesn't deter me from buying more. But that's me personally. And like I said from the very beginning of when I started trading cryptos, and I'll keep saying this crap, you have to be willing to lose everything. Everything. So my calculated risk in Bitcoin, my calculated risk in crypto, if it all disappears, it's risk that I was willing to take. And it's going to suck and it's going to sting, but I trade Forex and I trade stocks and options and I'll trade other stuff. That's the risk I'm taking. Okay. So all I'm saying is it can get uglier. If the stock market drops, I can't imagine that Bitcoin is going to be like, "Oh, we're bullish." But it's going to be awful. Everything's going to be red. But if you're long volatility, you're long bonds right now, and you are looking at financials, energy, and probably consumer staples where money is going to flow, where value is going to be popping up. That's the best place I could be trading right now. All right. And it still could be ugly, right? Like we could be in total value. I have a ton of value stuff in my portfolio and I'm still upside down, but I'm upside down way less than if I was in Peloton. I mean, I just had a credit spread close on Snap. Let me go to the chart here. Snap's trading at $30.59, and my put was closed for like $6 and let's see here. Snap. I just saw that it filled. SPY. So that closed for bear call spread for credit. Okay, good. Tilray filled. What the hell, dude? Where's my Snap? Okay, $6.90. So I'm gonna go to my chart here for Snap. I still have, so now I'm exposed on the long on the short put side. So I'm looking at an assignment, but if I go to my balances here, Snap, I'm just going to have a naked put in, but I just collected $6.90. So if I go to Snap right here, I have the $37, and here's my credit spread. Here's my break even sheet that I use. Snap. So I did the 37 by 36. I cashed in a long put, and it was for the 11th of February. 100 shares, $6.90, and this is closed. So what's interesting right now is I can calculate my break even. I have my credit spread, and this for Snap is not accurate, but I'm going to look at shares on February 11th. And my assignment price would be $37, and this is pending. Okay. If I'm assigned at $37, but I collected 50 cents on the credit spread and $6.90 on the long put, my ownership price of Snap, so 37 assignment minus the 50 cents and then a $6.90 cent put. My break even is 29.60. If I go to my chart, if I own this at 29.60, which is just below current price, okay, off the highs and my ownership price at 29.60, I just picked up Snap at a 65% discount. I'm pretty happy with that. I mean, I know that Snap isn't like it's not the Google of the world. It's not Microsoft. It's not Apple, but it is also it's a tech platform that has a massive user base, and if they can monetize in any way, if maybe it's on the crosshairs of Facebook again, I don't know. But I bought this at a 65% discount, and I actually set that long put last week, and it closed today, which is crazy. So anyway, and if the flush is down lower, then I'll have to use options to dig my way out and lower my cost basis. But if we also see a bounce, I might be able to get this where I take zero assignment. If this thing goes back above $37, I don't have any assignment. I keep my credit of 50 cents and I also cash in my 690 long put. And I could have zero assignment on the stock and walk away with, $700 in profit on an investment that maybe cost me $50 to $70 to take. So sometimes it plays out like that. Anyway, all right, I've done enough talking today. Any other questions? Right? Here's the deal, traders. Risk disclaimer. Okay? You know the deal. It's freaking risky. The markets are going to suck for a little bit. It's going to get ugly. I'm not saying that we can't have bounces. I'm not saying we can't have dips. We might have some, relief rallies, but look, this is a long overdue shed and correction and reality. So you put it out there, there's risk, trade accordingly, right? Forex is a great market to trade. Why? Because you can trade risk off. I mean, if you're looking at what do I trade right now, the stock market's selling, my stock portfolio is getting crushed. Well, be long the Japanese yen, right? If you're favoring stronger dollar, stronger yen, and stronger Swiss, then you're probably doing fine in forex for the last couple of days. And if that continues for this week, then risk off flows will be great for forex. And then I'm still going to hold positions and build and know my break even levels in stocks. So, but volatility is likely going to increase. We're seeing this already in our currency. 60 and 40 is not too bad. It's still not crazy high volatility. But we're just going to have to pay attention. Okay. So, like I said, this is what you sign up for when you're trading. Sometimes it seems like it's not fun, but you know what? If you're gonna survive it, you got to figure out how to trade. You know, and I've been through crap like this before. I mean, if we've gone through COVID and we've gone through Brexit, and we've gone through Swiss National Bank, we've gone through 2008, we've gone through the .com. I mean, I'm not saying it can't get worse, but we've seen the market have these similar hissy fits and tantrums. And this is just overvalued, artificially engineered. The market's going to find and seek equilibrium. That's what I think is happening. And so there's nothing that can be said that's going to be the aggressive dip. If we get into that 15% territory, we get into that 20% territory, we're going to see what the market's really made of. Because 20% is right on the cusp of a bear market, right? You cross over 20%, you're going into bear market territory. The thoughts of an recession come into play, and when that enters the vocabulary, like things can get really messy. But you'll also start seeing oversold conditions. You'll start seeing those extremes where maybe the buy the dip does happen. But I think we can sell off more. And so it might be a really ugly month of January, like one of the worst starts we've seen in a long time. But you know what? What are you going to do about it? Okay. All right. Good stuff. So that is why, traders, I have trading rooms. That is why I'm in the markets every single day. It's not always easy, but there are still ways to make money, and we'll do our best. Okay. All right, everybody. I will see you on Friday for a little recap. And this week in Equities on Demand, this week in Flex, see all the traders in the rooms. Looking forward to trading with everybody. We'll do our best. Okay. Thanks. Talk to you soon. Bye.